Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. We are looking at the ETF market. Year to date, total net inflows to ETFs are at $820 billion, on track for another $1 trillion year. And today I'm joined by Todd Rosenbluth of VettaFi to talk about some of the trends in the ETF market. Todd, you are actually the provider of this data. Thanks for joining us.
My pleasure.
All right, so we're up to 820 million, again, on track for another $1 trillion year, maybe even on pace for a record-breaking year. What is that level of inflows? What does that say to you about appetite or investor appetite for ETFs?
The appetite for ETFs is stronger than ever. We're seeing investors, both on the retail and the institutional side, increasingly adopt and use ETFs to get traditional equity and fixed income exposure, as well as diversifying to other asset classes.
All right, we're at kind of an interesting place in the market. A lot of people are expecting a Fed rate cut, either 25 basis points, possibly even 50 basis points next week. And then earlier this week, we got Oracle earnings that kind of reignited confidence in the AI trade. As you look at that, what does that potentially mean for ETF investors? We know the SPY and the triple Qs are obviously very concentrated with mega cap tech. Does that mean, is there a chance to see more money flowing into those products?
I do think we're going to see stronger adoption for equity ETFs heading into the fourth quarter and the rest of the year as investors embrace equity exposure, believing that the market can continue to climb higher. So SPY and the triple Qs are likely to be beneficiaries.
All right, we did see a number of banks actually raise their S&P price targets for the year. I want to get to picks. Audience is always looking for good picks. What's a good ETF to play the current market that we're in right now? Also keeping in mind that the S&P 500 and the NASDAQ are both trading at or very close to all-time highs.
So despite record highs or near record highs in the equity markets and the Federal Reserve set to be meeting, I still think there's a lot of uncertainty. We've seen investors embracing commodity ETFs and gold in particular. Gold is at also record highs, and the Spider Gold Mini ETF, GLDM, is a great way to get exposure to gold. 10 basis points, you get to diversify your portfolio into something outside of equities and fixed income and save yourself.
So the idea here is that you're investing in the gold miners or gold itself with this ETF?
So GLDM invests in gold directly. So it is different than having equity exposure. It's a different asset class. You're focusing on the price of gold and its likelihood to climb higher.
And obviously you see the potential for that to happen because of, it sounds like because of some of the uncertainty globally and even in the US economy.
That's right. So there's uncertainty globally. There's uncertainty about what actions the Federal Reserve is going to take and how monetary policy is going to shift perhaps in 2026. Investors are embracing gold, and GLDM is a great way to do so.